Hi, it's Greg here, and I've got your daily five. I did a whole bunch of warning on my last daily five column, so I'd encourage you to look for that. And if any of that resonates with you, that would be good. Just things are very stretched, so I want to make sure everybody understands that now. Don't want to come on every time on Daily 5 and just put up a bunch of cautionary charts. I don't usually. But I did want to make sure that people are aware of kind of how elevated this situation is, and we need to be aware of that. So anyway, with that, I've got 5 trade ideas, all from the Nasdaq, and we'll scroll through those. So my first one is Western Digital, and this one's a little bit interesting, trying to find something that hasn't run to the moon already. So Western had been relatively quiet until November, and then finally started to break out of the base it had built from the COVID low. And as it started to turn up here, what we can see is it moved up and then really kind of got above the June highs and then just kind of migrated sideways. What I really like was the price action last week, which was a selling week for the indexes, had a big wide price bar, $50 to $60, and closed in the upper half, even though the stock market closed down 4% last week. So it's that kind of thing that I was happy to see the strength in the price movement. And the second thing is there's a big 3-year downtrend here, and we're trying to move above it this week. So I like that as well. Relative strength is starting to improve, and the scooter ranking is up at 75 or a little higher than that, 85. So what it's showing us is that the stock is really starting to have better price action than a lot of the other stocks in the market. So from that perspective, I think it's pretty tasty looking chart. Looking at Workday, and you'll need to check and make sure that you know the dates that these companies all announce their earnings, because they're all coming up, I think. But here's Workday, and what you see is we've got a horizontal line, call it 2.25, and we're sitting right around there, but we just keep having a gentle uptrend of higher lows in here, and it looks to me like it's ready to try and pop to the upside. So again, the big drift here is the stock had been uptrending for 3 years, went sideways for 2, and now looks like it's ready to break out. That's the kind of thing I think is a lot better than trying to chase something that's already up a couple 100%. So anyway, I like this. I do like the fact that the full stochastic continues to bounce off the 50 line. That's usually the kind of thing you see in a bull market. So I like to see that. And relative strength has a bit of an uptrend going here, but I would just say it hasn't really been able to outperform the S&P for the most part for the last year. So I'd like to see that start to trend higher. Scooter ranking has moved from below 25 up to above 50. I like it when the scooter ranking starts to improve from a very deeply overdone level. Typically, you get the stock where it pulls back and it's kind of lost its momentum, and then it starts to work its way higher and it can go on a bit of a run. So all of those things add up to me to be, some nice data points on here. I would say volume is consistent, and the PPO is pulling back but not really dropping. So it looks like the stock still has potential here. So any sort of a breakout to the upside here, I think you want to own it. The 40-week moving average is down here around $200. And so, there's not a lot to dislike about the stock. It looks pretty good to me. SnowFlake. I put this on a daily chart, so I want to make sure people understand the difference. And I've tried to add a different indicator, just a couple of different indicators to talk about it a little more uniquely. We all know that the stock had a pretty heady run coming out November 16th, and then went all the way from 230 to 430. So, $200 in a couple of weeks wasn't a bad rate of return. Anyway, it's pulled back now for about 6 weeks. What I like is we're at the narrow end of the wedge here. We've got horizontal support and resistance showing up. We tested that in the middle of last week's pullback. Friday actually closed higher than the Wednesday, and that suggests to me, even though the indexes were pulling down, this stock showed a little bit of relative strength there. So I do like that. This big major downtrend, that's a great place to look on something like such a strong stock. And again, if it was compressed to a normal looking chart, I'll call it a 1-year chart, you'd see this as a more vertical pullback. But a breakout here, there's lots of upside potential. Let's call it 150 to get back to the highs of 2 months ago. So that looks pretty good. The PPO has been quietly coming down. It's just sitting sideways right now, and any sort of move up here would look pretty bullish. And I've also put a volume oscillator on this chart, percent volume oscillator, and typically that should start to turn up as the interest starts to grow, so it should move above its signal line. That would be helpful. Now, everything on this chart I like, even the quiet volume here. It's I don't know if it's run out of sellers or buyers, but I do know that the volume's gotten a lot quieter. So a little bit of the froth is off the top, and it looks pretty good. I would say that any breakout above the black line is something I'm interested in. I'd like to see it get back above this Keltner band, and that would just kind of start to be a support level for the stock as it goes higher. Checkpoint Software. This one, a big base here, 3 years just sitting sideways, and the stock, it's a pretty good software company, has broken out to a new high and then just kind of migrated sideways. What's really interesting is because it hasn't been shooting up lately, it's got a scooter ranking from down at 25, turning up to 30. I like the fact that it broke out, consolidated, held in here. Had an okay last week. It tried to break out to a new high and then closed near the lows, but stayed within the range of the prior weeks, which was good. And then a breakout here to the upside would be helpful. And if you can buy it close to this breakout line, at least you got your stop nice and tight underneath it. PPO is turning up near well above zero, which is all bullish. That's the kind of thing we like to see. Anyway, to me, it's a breakout with a little bit of a consolidation, and then should start to move higher. Adobe. This one's more interesting to me, mostly because I'm an okay boomer, just hanging out here, a little bit older than most. And the one thing I want to say here is that the scooter ranking got down into the low levels here, under 30, and then took off and went on a pretty good ride. The stock outperformed most of its peers, and it started to outperform the S&P 500 for a while. We're back down here, so we're starting to see a bit of a weak stock. I want to see this turn up and get going, but the stock is sitting right on its 40-week moving average. You can see this green line here. And last week, it did not make a lower low compared to the week before, so that was good. It's had an outside week, or I guess last week wasn't an outside. Just this week is an inside week. It's only Monday. So we'll see if it can break out to the upside, but I do want to see it hold the 40-week moving average. That's been pretty meaningful support going back, and as long as the overall market is relatively strong, I expect this stock could probably make a run for it. So, lastly, if you've got any questions about the services over at gregschnell.com, Dwight and I are working together to try and offer you more information in different and timely ways. Lots of work goes into this, weekly newsletter, weekly video, monthly recorded conference call. We just did the one on Friday. Trade setups, lots of those going on. We also have an electric vehicle newsletter. And all of that can be reached by going to gregschnell.com/daily5. Again, the goal of it is to try and keep you out of big market risk. And when the market corrects, hopefully you've been able to protect your capital so that near the bottom you've got some to deploy, whereas if you're always invested, market rolls over, you don't really have any flexibility. So we try to give off some data that we call the Schnell Strength Index. It's currently sitting around 20%, which is very weak, but if that was to start to improve, then we'd get back on the bandwagon. Anyway, hopefully all of that can help you. Lastly, please make sure and go check out my last Daily 5 of the last week of January. And the reason I want you to check it out is just to understand where we are in the big picture if you haven't caught it already. And then hopefully there's some new data for you there. Thanks again for taking the time to watch your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.